So silver has now broken an all-time high that has stood untouched for 45 years. As of the time of recording, prices are sitting above $60 per ounce, smashing the previous all-time high of $49.45 that was set in 1980, and returning over 100% year-to-date, becoming the best performing major asset of 2025. So in this video, we're going to break down the data behind this move. We'll look at what's driving silver demand, why supply has struggled to keep up, and how these imbalances have come together to produce one of the most significant rallies in the silver market's history. Let's get started. So to understand what's really happening in the silver market, we need to take a step back and look at the data behind supply and demand. That's where the underlying forces driving this rally become much clearer. So let's start off with silver demand. And broadly speaking, silver demand comes from 5 main areas: industrial use, investments, jewelry, silverware, and photography. Here we can see the average breakdown of global silver demand over the past decade. Industrial demand makes up just over 52% of total demand. Investment demand, including coins and bars, accounts for over 21%. Jewelry follows at just over 18%. Silverware represents a little over 5%, while photography is under 3%. Now, when we look at a year-by-year breakdown of these 5 components of silver demand in ounces, a very clear trend appears in the industrial category. Industrial silver demand increased from 491 million ounces in 2016 to 680 million ounces by 2024. And just as importantly, industrial demand now makes up a much larger share of the market. In 2015, it accounted for around 43% of total silver demand, but by 2024, that share had risen to roughly 59%. And this change tells us something very important. Silver is now primarily an industrial metal, one that the modern economy relies on more and more each year. This growth in industrial silver demand reflects a set of long-term structural trends, including electrification, renewable energy, and digital infrastructure. And one of the biggest drivers of industrial silver demand today comes from electric vehicles. Compared to traditional petrol cars, electric vehicles use far more electrical components, things like sensors, high voltage wiring, and onboard charging systems. Silver is used in many of these parts because it's the best electrical conductor of any metal. On average, an electric vehicle uses about 70% more silver than a conventional combustion engine car. And as global EV production continues to scale, growing at roughly 13% per year between 2025 and 2031, the amount of silver going into automotive sector is expected to rise steadily. Current forecasts suggest that automotive silver demand could reach around 94 million ounces by 2031, with electric vehicles accounting for the majority of that demand by 2027. And that's before factoring the additional silver required for the charging infrastructure that supports the broader shift to electric mobility. Silver is also becoming increasingly important in data centers. These are the large facilities that support cloud computing, streaming, and artificial intelligence. Again, because silver is the best electrical conductor of any metal, it's used in servers, circuit boards, switches, and the power systems that keep these centers running reliably. As companies continue to build more data centers to support AI and digital services, the amount of hardware that relies on silver keeps rising. Industrial research suggests that global data center capacity and energy use could double by around 2030, which means demand for silver in this sector is likely to grow steadily as the digital economy continues to expand. So alongside electric vehicles and data centers, silver is also essential in solar panels, circuit boards, sensors, and connectors that are found in almost every modern electronic device. It plays a critical role in power grids, 5G networks, and the broader electrification of infrastructure. And together, these industrial applications form the core of ongoing silver demand. And this trend isn't limited to a single region. China continues to scale its solar and EV production. The US and Europe are investing heavily in grid upgrades and new data center capacity. India is rapidly expanding its electronic manufacturing and renewable energy installations. And across these economies, silver demand is being supported by government policy, private sector investment, infrastructure spending, and ongoing technological shifts. Now let's take a look at supply. Supply comes from 2 main sources: mining and recycling. Over the past decade, more than 80% of the world's silver supply comes from mining, while less than 20% has come from recycling. The structure of the mining industry helps explain why supply has not reacted quickly to higher prices. The key reason is that most silver is not mined from dedicated silver mines. Only about a quarter of global supply comes from mines where silver is the primary metal. The majority is produced as a byproduct of mining other metals like zinc, lead, copper, and gold. This economic concept is known as joint supply, where producing one good automatically results in the production of another good, often linked by a common production process, in this case, mining. What that means is that silver supply depends far more on the economics of those other metals than on silver's own price. So even if the price of silver doubles, global supply doesn't immediately surge. This is because silver supply is relatively inelastic in the short and medium term. And when we look forward, the research shows a similar pattern. The Silver Institute expects mine production to be flat or growing marginally through 2026 and 2027. Moreover, mining consultancies note that there are no substantial wave of new primary silver projects scheduled to come online in the next 3 to 4 years. Recycling provides a bit more flexibility in the market, but even there, the outlook is limited. Much of the silver used in modern electronics ends up in components that are not economically recoverable, so only a small portion of consumed silver is able to be recycled. Ultimately, the structural inelasticity of supply is one of the reasons the silver market has tightened so steadily in recent years. Having gone through the demand and supply data, you may have already noticed that the numbers don't quite add up. Since 2021, global silver demand has exceeded global supply every single year. In other words, the world has been using more silver than it produces. This is known as a structural deficit. Now, a deficit doesn't necessarily mean that the world has run out of silver. What it really means is that the current production isn't enough to meet the current demand. And when that happens, the market turns to above ground inventories. That is the silver that already exists in vaults, bars, coins, and industrial stockpiles. And that's exactly what we've seen over the past 4 years. The Silver Institute estimates that between 2021 and 2024, roughly 600 to 700 million ounces have been drawn down from these inventories. That's a massive amount of silver quietly leaving storage to fill the gap. And to make that happen, holders of silver, whether they're private investors, institutions, or industrial users, need a price incentive to sell and part ways with their precious metals. And this is part of the reason why market prices have been rising so aggressively. The market is essentially signaling we need more silver now and we're willing to pay more for it. So looking ahead, Metals Focus and the Silver Institute expects this pattern to continue. Their latest forecast suggests that the silver market will remain in a deficit through 2026 and into 2027. The projected deficits may vary, but most of the estimates fall in the range of 80 to 150 million ounces per year. In other words, the market may continue drawing down on above ground stocks for several more years unless either demand weakens significantly or supply increases rapidly. And as we've discussed, neither is likely to happen. And when you put all of this research together, the pattern becomes much easier to see. The silver market isn't dealing with a temporary shortage. It's going through a multi-year period of deficits where demand keeps outpacing supply. And as long as the market has to draw from existing above ground inventories to close that gap, prices will act as the mechanism that encourages people to release their silver back into the market. In other words, higher prices are how the system rations a metal that's becoming increasingly scarce. Now that silver is sitting above $60 at an all-time high, you might be wondering if it's still a good time to invest. One way to consider valuation is through the gold to silver ratio. In simple terms, the gold to silver ratio tells us how many ounces of silver it takes to buy 1 ounce of gold. In the modern fiat era, the ratio has usually floated somewhere between 40 to 1 and 80 to 1, with a long run average in the mid-50s. There's been extreme moments like in 1980 and 2011 where the ratio briefly dropped towards the low 30s. And on the other side during COVID, the ratio was pushed to around 120 to 1, as silver sold off harder than gold. As of the time of recording in December 2025, the gold to silver ratio has fallen below 70 to 1, which is still above its long run average. To further add context, we could also consider the gold to silver mining ratio. Each year, the world mines roughly 7 to 8 ounces of silver for every 1 ounce of gold, indicating the relative scarcity of each metal. Yet the market still values 1 ounce of gold at around 70 ounces of silver. Another way to think about valuation is through inflation-adjusted pricing. If we take the previous all-time high that was set in 1980, where silver reached around $49 per ounce, and adjust that for inflation in today's terms, the equivalent price today would be worth well over $190 per ounce. And taking the 2011 peak, where the price of silver also rose close to $49 per ounce, this would translate to roughly $70 to $75 in today's terms. So while silver is currently trading above $60 per ounce as a new high in nominal terms, it's still meaningfully below both of those peaks once we account for inflation. Alongside the rise in industrial use, investment demand for silver is also becoming more important. The broader macro environment, including expected rate cuts, elevated inflation, growing government deficits, and concerns about long-term currency debasement, has historically supported strong investment interest in hard assets like gold and silver. If you'd like a deeper look at how currency debasement and the declining dollar fit into this picture, I've made a full video on that topic where I also share my thoughts on gold and silver. Policy is also another important factor. In 2025, the US has officially added silver to its critical minerals list, recognizing its importance across sectors such as defense, energy, transportation, and infrastructure. This reflects how essential silver has become in the modern economy, and it also raises the possibility of government stockpiling, which would add another layer of relatively inelastic demand to the market. And on the industrial side, the long-term trends remain firmly in place. Solar installations continue to expand, electric vehicles require more wiring and more advanced power electronics, aging power grids need more upgrades to support renewable energy, and data centers, especially those built to support AI workloads, depend on highly reliable electrical systems, many of which rely on silver. So if you believe the world is moving towards greater greater electrification, increased renewable energy adoption, and more digital infrastructure, then you're also assuming higher long-term demand for those materials that makes these technologies possible. And silver is one of them. So as we wrap up, here are a few important key points to take away. The 2025 silver rally isn't just a speculative story. It sits on top of several years of structural deficits where demand has outpaced supply. Industrial demand has reached record highs, while supply growth has not been enough to rebalance the markets. And silver is now recognized not just as a precious metal, but as an industrial and strategic material. And looking into 2026, the key things to watch are the size of the upcoming market deficits, investments into solar, electric vehicles, and data center infrastructure, movements in real interest rates, and how critical mineral policies evolve, especially around stockpiling and permitting. All of these will help shape the next stage of the silver market. So if you found this video useful, please like and subscribe for more insights into economics, investing, and global markets. Thank you for watching and have a wonderful day.